What's up, traders? Andrew O'Connell here with Pristine Capital. What a beautiful day in the market, am I right? No, today was absolutely dreadful. It was a multi-standard deviation event in multiple asset classes. Let's dive into all of the madness. If you survive today, you can survive anything. So there is that. All right, let's dive in. S&P 500 for our box scores was down 3.8%. NASDAQ QQQ down 4.65%. The IWM small caps were down 4.7%. The dogs of the Dow were only down 2.8%. Our best performer out of these headline indices in the ARK Innovation ETF, which I am still long, my 2023 ARK calls, was down a whopping 8.8%, team. That's a huge loss for one day. Take a look at where everything closed in terms of its day's range. We had the Dow Jones with the best range at 26%, pretty dreadful across the board. And we finally got a big blowout within the volatility space. The VIX futures curve, it actually inverted today. And this is really the first sign in a couple weeks that, there's some major panic going on in the market. Breadth was absolutely washout horrible. We only had 1.6% up volume, and my trend model remains at a -3. News. There were a couple of really interesting headlines I do want to talk about very briefly. We had circulations that talks that the Saudis will likely boost oil supply if Biden visits. So that's pretty odd. It seems as though they just know that the Biden administration is pretty desperate and that we're suffering from this inflation problem. So basically, if Biden wants to go over and kiss the ring, they might do something about oil production. And then another headline that really just shows this Biden administration, they might be starting to break. You can see the U.S. tells industry to buy Russian fertilizer in a push for grain. So the fertilizer shortage, that has been a big driver of this inflation. Because remember, the major areas where we're still seeing the inflation are food and energy. So this could potentially help that. But it really just goes to show that the administration, they're really starting to feel the heat. And then Fed swaps pricing a 4% terminal rate by mid-2023. We had a massive move within the fixed income market. But look at our FinViz heat map. This is just, it's a bloodbath. And we had the same exact looking heat map on Friday. So we've had a couple of just really down-only days in the market. At this point, I do believe we're down, it's almost like 9% in the S&P 500 within just a few short days. So that's why I said earlier, if you can survive this, you can survive anything. Now, I know there's pain that's being felt across the industry. Most investors, if you have a 401k, you're long the market. If you have savings, usually you're long the market, that sort of thing. So, everyone is going through a bit of a tough situation right now as the market hits these lows. So it's just important to know that you're not alone. And yeah, if you can make it through this, you can really make it through anything. When these kinds of sell-offs happen, that's a lot of times when you get the biggest opportunities. So just remember that. And it's super important as an investor or trader, you always have to be able to look at the glass half full. Take a look at this. Another historic measurement, our tick index, which measures at any given moment how many stocks on the exchange are ticking up versus ticking down. This hit a -2,032 reading. And apparently there's only like 6 other times in the last 30 years that we've gotten a reading below 2,000. So it really just goes to show that we had powerful washout selling today. Take a look at our sectors. In our top momentum slot is still KWeb. Look at this. It was down almost 7% today. Emerging markets, internet, and e-commerce down huge. We already talked about the ARK fund down huge. Blockchain assets also down huge. We had some big headlines in the blockchain space. The first was that Celsius is pretty much going insolvent. They halted redemptions and just a huge mess. That's basically like a systemic event within the crypto space. And remember, we had the Luna UST debacle just, what was that, a week or two ago? So these dominoes are really falling within that crypto space. And in my opinion, we're seeing capitulation there as well. Then we had a Binance headline that they actually halted their redemptions for a little bit as well. They ended up getting it together about midway through the day, but that was another like, oh my gosh, this crypto space is really just kind of coming unglued. Style factors. We had high beta down 6.55%. and small value down 4.57%. Those are huge moves. All right, let's take a look at our headline indices. So we had first, before we even go into the equities, let's talk about the fixed income. So these 10-year treasury futures, we had on the lows, this was over a 2 ATR move. I believe it was like 2.1 or 2.2 on these lows. These are huge red candles for bonds. Basically what we're going through is we got that CPI data point, I believe it was on Friday, and it came out a little bit hotter than expected. Again, food and energy really driving that. And we're just getting this very rapid repricing across the fixed income market, the FX market, and in turn that is impacting the equities market. So it is very tough when these bonds, when they're still in this price discovery mode, where yields are just moving higher. The market's pricing in more Fed tightening now, and so the bonds, they're moving to price that in. So it's very tough to get a nice calm equity market when you're seeing this level of volatility in the treasury market. Let's take a look. Speaking of volatility, the VIX is up at 34. So we pretty much hit the highs that we had hit in May. And remember, this was an elevated volatility regime for quite a while. Who knows if we end up staying up at these levels for quite a while, if we end up coming off very quickly. But all we know is we are in the throes of another risk-off liquidation event. And we have PPI data coming out tomorrow morning. I think it would be very tough at this point for that to surprise to the upside in terms of inflation, because the market's already pricing in pretty much like a new paradigm in terms of inflation. And I really think, like, at this point, it seems like the whole market is kind of like just like radically going like the complete opposite way, where it's like we're just gonna have inflation forever. And yeah, we'll have to see how that plays out. I do think things are starting to get a little bit overdone, but you know, who knows? We're in a negatively trending market. And look at this, the trend index was over a 3 as well. Pretty wild stuff going on. Now take a look at the S&P 500 again. We've had 1, 2, 3, 4 consecutive red candles. And what's interesting is the market pretty much found support at this teal downward trend line that we were tracking ever since, late March. So pretty interesting how that kind of thing happens. We did undercut the lows from May, and we actually closed below them. So that's not the best sign. Now at this point, is the market a bit oversold? Absolutely. We saw a very heavy level of put buying today. The CNN Fear and Greed Index, ticked down, volatility exploded. So do I think now is the time to be like, entering fresh shorts and or, stopping out of longs? Not really. I mean, if you do have to manage your risk, you got to manage your risk. But I think at this point, hey, this is day 4 of the sell-off. I mean, look at some of these prior moves lower. This one was like, 1, 2, 3, 4 days. 1, 2, 3, 4, 5, 6 days. 3 days here. This one was a little bit longer back here. But yeah, to be honest, like after candles like this, it's tough to be like, all right, now let's get defensive or whatever. So let's take a look. That is the S&P 500. And look at the hourly chart. Look at where our weekly value area is. We are so far extended to the downside already. So we're definitely in tail risk land. Let's put it that way. Let's take a look at our NASDAQ. NASDAQ, same exact situation. Absolutely getting annihilated below this monthly value area. The Russell 2000, same deal. And the Russell 2000 actually made a higher low compared to May. That's interesting. Only by a couple ticks though, so it's not really like we can go off of that at the moment, but hey, we'll take it. Dow Jones also undercut the lows. In terms of trades that I did today, let's take a look. What do we got going on here, team? I grab these screenshots right here. So the past 2 trading sessions, I've made sure, let me trim exposure. I'm not going to add any net new longs. Today was the first day among the last few that I actually did add some long exposure. So I got long the SPY July 15th, 380 strike calls in pretty small size, just a 1-star trade. And then BITO, the Bitcoin futures ETF, I got long the September 16th, 15 strike calls for $2.19. Binance locked withdrawals earlier in the day, and that could have been a huge systemic risk event had they become insolvent. They just announced that they're resuming withdrawals. So as soon as I saw that headline cross the wire, I went, I'm buying these Beto calls. That's exactly what I did. And I sized that one a little bit bigger. You can see it's a 2-star trade. I'm still holding about 25% cash. I gotta say, this sequence, it's been tough because I did a really good job at pretty much buying the bottom over here in a lot of these growth stocks. I did do some trimming as we moved higher within this rally, and I did de-risk as my trend model flipped. But now with 2020 hindsight, of course, I wish I had taken off a little bit more. Some of these growth stocks that I've been holding, they've pretty much round tripped. But I do think that, yeah, we can likely see higher prices in these growth stocks. Could the market just, oh my gosh, and that's, as the future is open, could the market slip into the abyss? It certainly could, but I feel good about the exposures that I'm holding, and I do have a cash buffer to potentially deploy some more capital tomorrow. With that said, hope you all have an awesome rest of your night. If today was like a barn burner of a day and you're tired, make sure you get some rest. You don't want to get burnt out. And yeah, make sure you're ready to go for tomorrow. That said, have an awesome night, everyone. See you all next time.